If you get overtime income at your job, you might not be able to use that to qualify for a home loan. And that's what we're going to talk about today. So, today we're going to talk about the underwriting guidelines for Fannie Mae. Fannie Mae is a conventional loan program, which just means that it's not a government loan program. And we're going to talk about how they treat overtime income. So when you work your job, if you have a salary job or an hourly job and then you work overtime is not always consistent. Overtime is considered variable income, and variable income really confuses inexperienced and lazy loan officers. So what I'm going to attempt to do here is I'm going to give you the overtime, how you calculate overtime income for Fannie Mae, Freddie Mac, FHA, VA, and USDA. So I would recommend, now you can't use USDA unless you're buying in an area that's eligible for USDA. You can't qualify for a VA loan unless you're eligible for unless you've served in the armed forces, active or retired. So if you have overtime and you're just getting started and you're just thinking about qualifying for a mortgage, but you're not quite sure what to look at, I would look at Fannie Mae, Freddie Mac, and FHA. So there's two conventional options, one government option. Now, all options are going to essentially look at the same things. They're going to look at your history of receiving overtime, and then they're going to look to see if your overtime is consistent. If you receive about the same amount of overtime, and then they're going to look to see if it's increasing or if it's been decreasing year over year. Okay. And let me tell you exactly. So here's how they look at this. So first thing is the history of receiving overtime. They are looking for a 2-year history of receiving overtime. So that means that, when you apply for a mortgage, the loan officer is going to send a form to your employer. It's called a verification of employment. Sometimes it's automated and we can do it online, but sometimes it's a form, and it's going to ask your employer to break out what was your normal hours and salary or compensation, and then what was your overtime compensation. And they're going to take that. And they're going to want to make sure that you've been receiving it for 2 years in the past. So you have been receiving it. Now, they will accept 12 months with positive factors. Now, this is where, as a consumer, this is where it gets really, really tough, because you would just assume that that is a rule, and that if you have less than 24 months, that the loan officer just knows to look for compensating factors or other positive factors and attempt and then take it to the underwriter and have the underwriter make a decision. So there's a thing called underwriter discretion, and underwriter discretion basically says that the underwriter will interpret the guidelines to the best of their ability in a way that protects the company from default, right? So if it's going to increase risk to the lender, they're not going to do it. But if, I don't know what a good example of this is. Maybe you've been working for 18 months, right? So you don't have 2 years worth of overtime income, but you've been working there 18 months and you've had the exact same overtime for all 18 months. And the nature of your job or the nature of your position is that you will always receive that overtime. You have good credit, you have reserves, you have a down payment. All these are positive and compensating factors that will offset the risk of not showing a 2-year history of overtime. Now, is the income consistent or is it increasing? Now, most lenders are going to use the previous year to date and your year to date income, and then they're going to average that income. Now, this is important. Overtime income is averaged. So if you have made $5,000 of overtime income this year, let's say it's increasing, right? But you made a lot less than that in the previous year. The underwriter is going to average year to date plus the previous year. So you're going to get they're going to take that, and usually you're going to divide it. So if you have a full two, so it's today's February, right? Well, I'm recording this in February. I don't know if you're watching it in February, but this is a good example. So what we would do is uh, we would take last two previous years and and your paychecks for February. And then we're going to divide that not by 24, but by 26, because you have 2 years, 24 months, and then 2 years, 2 months this year by 26 months. And we're going to average that out. And then that average number is what you can use as income to qualify, that contributes towards your debt to income ratio. So that's the other really important thing to remember, is that all overtime income is averaged. So if you look at your pay stub and you see the total amount of overtime income, you can't divide that by how many months that you've had year to date. It doesn't work that way. You're going to average it over the whole history of you receiving income or receiving part-time income. Now, if your income is declining, or if your overtime income is declining, if it has declined but it's stable, the underwriter will what they might do is they might use the history. So they'll use the 24-month history because you have a history of overtime. That's fine, but they're not going to average your overtime. They're not going to average that number that you can use for your debt to income ratio over the entire time, because your overtime has declined. So what they'll probably do is use your current rate of overtime. And that could be averaged since it's stabilized. So in this scenario, you had overtime, your overtime declined. It's less than it was last year, but it's been the same for the whole year. That's the scenario that we're talking about. The underwriter's not necessarily going to give you the benefit of the higher overtime in the previous year. They will give you the 24-month history of that, but they're only going to use what your current overtime is, and they're going to average that over the period that it was consistent. It's a conservative calculation, and that's what I want you to. What I really hope is that as I describe these things, you understand that there is some complexity to this, and there is also um, experience really comes into this. If you don't have experience with this, you're not going to get these numbers right. The kid in the call center is not going to be able to tell you what you qualify for. Actually, the kid in the call center will just ask you what your year-to-date income is and won't even ask you if there's any overtime in there. And then that's really going to be a bad surprise, because you're going to find out you can't use your actual income to qualify, because overtime is variable income and it has different underwriting guidelines. Okay. So, and again, I'm not trying to confuse you. I'm trying to educate you, and I'm trying to empower you, because there are experienced loan officers that have been doing this for years. You're not going to find them if you fill out a form on the internet. And if you try to push button, get mortgage, you're not going to get this insight until it gets to the underwriter. And then the underwriter is going to turn it down. You're going to have a whole world of problem. Declining income. Here's another declining income. If the overtime trend is declining, the underwriter is probably going to consider it not stable, and they're probably not going to be able to use that overtime as income. And this is where it gets really, really difficult. If you got overtime income so we're in 2023 right now. If you got overtime income in 2021, or if you got overtime income in 2022, or 2021, it declined in 2022. And if it's even lower in 2023 in your first couple of pay stubs from 2023, the underwriter is probably going to look at that and say, you know what, because it's going down, we can't use that to show that you have the ability to pay your mortgage payment moving forward, and they may not be able to use it. Now, again, there is a such thing as underwriter discretion, and underwriter discretion is going to allow an underwriter to do an analysis and look at compensating factors. If you have a large down payment, if you have good reserves, if you have a high credit score, all of these are positive things that work in your favor that the underwriter may give you some credit. But if your overtime has consistently been declining, there's a real good chance that that's going to have to be backed out of your income for calculating your income for your debt to income ratios for qualifying for this mortgage. Declining income, determine if it can be used as variable income. If it cannot be averaged over the decline period. So that's what the underwriter is going to do. If it's declining, they're not going to be able to use it as variable income because it's not variable income, it's declining income. And if it's declining income, then it's not going to be able to be used. So the single most important part of this is that you work with an expert, somebody that knows these guidelines. They don't necessarily have to know all of the guidelines, but they have enough experience to know that they need to go to the guidelines and figure out what's going to be the best option. So these are Fannie Mae guidelines, and what you're going to find is Fannie Mae Conventional is going to be a little bit different from Freddie Mac Conventional, which is also going to be different from FHA. So my point in doing this is to show you that if you're trying to qualify for a mortgage and your loan officer is saying, oh, we can't get you qualified for this loan, there may be other options. There may be alternative conventional options, and you may be able to look at an FHA options. But an experienced mortgage professional is always going to look up their guidelines, and they're always going to research your options, and they're going to present you with a suite of options. They're not just going to look at it and say, no, this doesn't qualify. They're going to say, this doesn't qualify because of this. So if you are getting turned down or people are saying, no, we can't do this, and they're not giving you an explanation, there's a really good chance that you do qualify. They just don't know the answer. They probably work in a call center somewhere, and you need to find an expert. Where do you find an expert? Well, you're in the right place, findmywayhome.com. I started this website when the real estate market crashed in 2008, and I did it specifically to help educate and empower folks like you so that you can help avoid, actually, I'm trying to keep you out of call centers because these call centers are filled with people that don't have any experience and they only want the cleanest and the easiest loans. And if you have a bunch of overtime income, especially if it's been fluctuating, you're simply not going to get through their process. They're going to tell you no when the answer is probably not no. It's just that they don't know how to do it. So how do you talk to an expert? I recommend you can go online, you can look for people's reviews, you can make a bunch of phone calls, or if what I'm saying today makes sense to you, findmywayhome.com is a network of professional, experienced loan officers that I know, like, and trust that are there to help answer your questions about qualifying for a mortgage. So you can go to findmywayhome.com. There's a link in the details below, and you can either ask your question on the homepage, or ask your question in the question or answer box, or you can search for a loan officer in the state that you live in. You can watch their content, you can read their reviews, and you can reach out to them directly. But that's what we're here for. We're here to help educate and empower you, and help you to make more informed decisions about qualifying for a mortgage today. So I hope that was helpful. And again, if you're looking at a conventional mortgage and you have overtime, make sure that you watch the Freddie Mac the Freddie Mac video on the underwriting guidelines for calculating overtime income. I hope this was helpful. Thank you.